Although ethics and controls are usually asked as part of other questions, I have created a question here that focuses just on these important concepts. Take a minute to quickly read the article over here. The case against the Tongaat executives. Accused face 19 fraud charges for allegedly backdating the sale of properties. When we talk about backdating the sale of properties, what that means is that the properties were sold, but it was recorded at a date before the actual sale. Tongaat financial statements were materially unreliable and false. Remember that this important term is one of the International Financial Reporting Standards principles that refers to how important is a piece of information. In this case, the fact that they changed the date of the sale made a big difference to the way that the stakeholders would have used the information to make their decisions. And it basically made the financial statements unreliable. This article is taken from February 2022. Former Tongaat Hewlett CEO Peter Stauder, 5 former senior executives, and a Deloitte auditor are facing 19 fraud charges and 3.5 billion rand for allegedly backdating the sale of properties and falsifying the group's financial statements to boost revenue. So that tells you why they were actually taking these risks. They were trying to make it look like the business had more income than they did. Kruger, who was a registered auditor and engagement partner at Deloitte, was also charged with contravention of the Auditing Profession Act. That's particularly concerning because Kruger was employed as an auditor and he wasn't actually one of the original employees of Tongaat Hewlett, and he was supposed to come in and check that everything was actually on track. Remember that an auditor's role is to act as a check on the financial statements. Here we have a little excerpt from the financial statements of 2021. Regulatory. On the 1st of July 2020, the JSE Limited imposed a public censure and the maximum fine of 7.5 million rand on the company due to the material misstatement of its financial information from 2012 to 2018. Obviously, the JSE Limited is referring to our stock exchange that we have in Johannesburg. And obviously only public companies can be listed there because they have to have the shares being transferable, which private companies do not. So that immediately also points out that Tongaat Hewlett, if they're on the JSE Limited, must be a public company. Notice that as I'm going through my information, I'm making little notes and comments on all of these things. You can do exactly the same thing in your exam. Obviously, don't spend too much time on it, but making a couple of notes here and there often helps you to focus. Right, multiple choice are not questions that are common in accounting, but they have come up in the past. So never say never. Don't assume that you won't get any. For any subject, when you're doing multiple choice, make a point of trying to figure out what the answer is before you look at all the options, because sometimes the options will otherwise confuse you. To whom were the former Tongaat Hewlett executives accountable? Well, remember that to whom you are accountable is referring to who do you have to answer to? Who are you responsible to? The executives, if we're talking about the Tongaat Hewlett executives, we're referring to the directors. And think about who are the directors actually accountable to. And the first and most important group that they're accountable to of the stakeholders is obviously the shareholders. And yes, other stakeholders as well, but shareholders will be the most important. So if we go and have a look through the options now, let's see what comes out. There we do have an option that says shareholders. So we can put a little tick there to show we like that option. Would the directors be accountable to the Independent Regulatory Board of Auditors? Well, if any of them independently were actually also qualified as auditors, it is possible. but certainly not all of them. So I would be inclined to say no. South African Institute of Chartered Accountants, or SAICA, again, if they were registered chartered accountants, then perhaps in their personal capacity, yes, but in their role as directors specifically, no. And certainly not all the directors would be expected to be registered CAs. None of the above? No, because we like option A. So there you go. Number 2, to whom was Kruger accountable? Well, who was Kruger? Remember, Kruger over here is the registered auditor for Deloitte. So that means that if he is a registered auditor, he would have to be registered with the Independent Regulatory Board of Auditors. So yes, he would be accountable to them. Any auditor also has to be a registered chartered accountant. And so, yes, he would also be responsible to SAICA. Deloitte, well, Deloitte is his employer. So, yes, absolutely, he's accountable to his employer. His employer pays his salary. And so, therefore, yes, we like all of the above. Number 3, why is it such a problem that the financial statements were materially unreliable and false? Remember that we spoke about this issue of materiality, and we said the materially unreliable means that it's problematic because the stakeholders who are using the information are unable to make decisions correctly. Stakeholders are misled about the financial performance and health of the company. Well, yes, that is a big problem because it means that they don't know whether the information is actually true or not, if there's been material misstatement. So if they've been misled, then yeah, they're not going to be able to make decent decisions. Decisions will be made on the basis of incorrect information. Absolutely. If the information has not been reported correctly because there's been misstatement, that is very problematic. The international financial reporting standards require accurate reporting. Of course they do. Fair presentation is probably the cornerstone of the entire thing. Fair presentation means that we want to ensure that all our financial statements are true and accurate, lacking any bias, free from error, etc. And so, yes, we can choose all of the above. Number 4, what is the meaning of material in this case? Remember, we spoke about material in the article, talking about how important is it. There's our concept of materiality. So, if we're talking about what do we mean by materiality, the importance of whatever's being reported and how it will impact the decision-making of the shareholders or the other stakeholders that are busy using the information. So, it is important enough to affect the decisions made by the directors. Well, this answer looks very plausible. However, the problem here is that it's talking about directors, and we are wanting to concern ourselves with the decision-making of stakeholders rather than just the directors. So therefore, no, we don't like that one. The incorrect information will lead to incorrect decisions being made by stakeholders. Yes, that is certainly explaining what we've just come up with above. The fabric of the financial statements lacks solidity. Well, that doesn't really mean very much, other than, yeah, you know, is there enough detail, etc. in there? It's a bit vague. So we don't really like vague. If you're not sure if you want to say yes or no, put a question mark to show that you're unsure, and you can always come back to it. The information in the financial statements was not important. That doesn't make sense, because any information in the financial statements should be important to the stakeholders. So no, your answer here will be 4B. Number 5, how would the executives have benefited from falsely boosting the reported revenue? Well, think about how did they actually relate to this. Over here, we spoke about the boosting of the revenue. That's why they did it. And how would they have benefited if they are boosting the revenue? That means that they are going to probably get higher bonuses or do well, be voted in again, etc. And they are trying to protect their own personal interests, most probably. A, they would have earned higher bonuses based on the inflated revenue. Yes, that matches what we've come up with. They would have received lower directors' fees. No, lower doesn't make sense. They might have earned higher fees, but certainly not lower. The company would have had to pay more tax. Well, that certainly is true if they were boosting the revenue. However, it's the company that would have suffered, not the directors. And over here, the question is focusing on how the executives have benefited. And the executives aren't going to have to necessarily pay more tax as a benefit. That's going to be a disadvantage, and this is focusing more on the company. So no. Higher dividends would have been paid to shareholders. Although that is true, again, it is not going to benefit the directors. So it doesn't relate to the directors. It's not answering the question, so we can't use that one. So your answer is A. Number 6, as a result of their unethical activity, these directors will now be. Okay, now let's go and have a look. It's the question itself is a little bit more open-ended, so you might not be able to come up with your own options immediately. We can, in a case like this, go and have a look and see, well, which ones are valid and which aren't. Just for yourselves, though, think about the fact that because they've had unethical activity, it means that they are actually possibly going to be liable for the business debts, etc., as necessary, because remember, if they're caught, they are held personally responsible. They could also be thrown in jail if they're found to have done something criminal, etc. So think along those lines. A, personally liable for Tongaat Hewlett's debts? Absolutely, because they acted in the best interests of themselves rather than the company. And they obviously should not be doing that. They should be acting on behalf of the shareholders. They will now be reappointed as directors by the shareholders. Well, I certainly hope not. I certainly wouldn't vote them in again if they were messing with my finances like that. Responsible for creating King 5? No. It's a bunch of lawyers headed by Mervyn King who actually create the different King reports, and we're currently on King 4. And the last thing you're going to do is get people who are acting unethically to go and create the next one. Remember that the King report purpose is to try to give recommendations and guidelines of how to act ethically and govern a company responsibly in the interests of all the shareholders. And then the last option, they will now be unqualified directors. No, that's just a silly term that I made up here. Unqualified is a term that we usually use to relate to the audit report. It's got nothing to do with the directors. It's to do with whether the audit report is qualified or unqualified. In other words, can you trust the financial statements or not? So over here, we would choose A. Number 7, Kruger was a registered auditor at Deloitte. Deloitte would have been. Now remember that Deloitte is the external auditor. that would have been looking at the financial statements of Tongaat Hewlett to check if they were a fair representation of the actual state of affairs or not. So, would Deloitte have been on Tongaat's Audit and Risk Committee? No, actually. The Audit and Risk Committee, although the word audit in there may mislead you a little bit, that is actually a set of internal people who are going to be having a look at the risks and the controls and everything in place for Tongaat Hewlett, whereas Deloitte is external. So no, that is not an option. Would they have been Tongaat's internal auditor? No, for exactly the same reason. Tongaat's external auditor? Yes, as we've just discussed. Tongaat's legal consultants? No, that would be the lawyers. Deloitte is an auditor, not a lawyer. It's a completely different profession. And so therefore the answer is C. Number 8, why is it particularly concerning that Kruger was also involved? Remember that we discussed this a little bit earlier, and we pointed out that Kruger being the auditor is of concern because the auditor is supposed to be the check or act as a check on the activities of the company to try and be able to assure the shareholders that they can actually trust the information, etc. So over here, his main function was to identify fraud. Well, that would be quite funny because he's the one who's actually encouraging, or not encouraging necessarily, but going along with the director's activities of fraud, basically creating fraudulent financial statements by backdating the property purchases. But notice here, an auditor's role is not to identify fraud. That is often a misconception. Although fraud often is identified when auditing takes place, both internal and external, that is not the main purpose. The main purpose of your external audit is to verify the validity of the financial statements, and the purpose of an internal audit is to check the controls that they are protecting and safeguarding the assets of the company. As if along the way they pick up that fraud might have taken place, then yes, you would bring in the forensic auditors who are like the CSI accountants to come and check what's actually going on. But that is not the main function. His role was to check the validity of the financial statements. Yes, we like that. That is the purpose of an external auditor. He should have remained subjective at all times. No, we don't like subjective. He should have been objective at all times. In other words, lacking bias. He was not qualified. He was qualified. He just totally abused his qualification. So no, your answer is B. Number 9, the JSE imposed a fine of 7.5 million rand on Tongaat Hewlett in 2020. From this, we can deduce that. Now, the fact that we're talking over here about the JSE imposing the fine on Tongaat Hewlett immediately tells us that Tongaat Hewlett has its own legal personality, so therefore it must be a company of some kind. The fact that it's the JSE that imposed it means they must be listed, and therefore they have to be a public company because private companies' shares cannot be easily transferred, and therefore they cannot list on the JSE. So therefore, you can immediately see your answer is B. Number 10, what is the purpose of the King Code? Well, remember the King Code or the King Report is what we just spoke about a few seconds ago. And that is a set of guidelines to try to encourage the good management of companies. So it's encouraging the management of companies in an ethical manner and more importantly, in the interests of all stakeholders. And that's very important, because all stakeholders doesn't mean just the shareholders. It means also the employees, the suppliers, the customers, absolutely anybody else who has an interest in the business. So, is it a code of ethics for accountants? No, not at all. Is it a set of guidelines to encourage business management that is in the interests of all stakeholders? Yes, that ties in with what we've just said. It is a law incorporated in the Companies Act to ensure that no fraud takes place. Interestingly, the first part over here, that it is incorporated, the whole King Code, no, but there are aspects of the King Code that have been incorporated in the Companies Act, but it's not to ensure that no fraud takes place. That doesn't make sense, and it's not the entire code. Parts of it are included. It aims to increase transparency of accountable officers. Well, no, that's just using the terms transparency and accountability, which are obviously very important when we're talking about ethics. Ethics basically requires being transparent with all those people to whom you are accountable. But over here, it just doesn't really make sense. What do we mean by officers? It's just a bunch of nonsense that we've made up there. So your answer is B. Hopefully that helps you to have a little bit of a better understanding of your ethics and controls. Now you should be ready to try some other questions and other topics that include questions on ethics and controls and the auditing.